So it changes. So anyways, good morning. It's 7:30 in the morning, and my eyes are blurry with lack of sleep, but nothing, nothing unusual. I'm actually wearing sunglasses because my eyes are just getting fried from sitting in front of the screens. Anyways, hey, enough about me. How about you? How are you doing? It's Wednesday, June 3rd, 2015. This is your daily Forex trading strategy session. Once this video is done, it will immediately be archived at youtube.com/c/TradersWay. We have a standing rule here in our community. If you watch it, you must leave a comment. Simple. Hey, my name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay. Thank you for being a client. Muchas gracias. Muy bien. Today is ADP Day. Yeah, the Wednesday before non-farm payrolls is ADP. Another dumb prediction. This is used by many to predict the outcome of non-farm payrolls. So good, bad, or ugly, it provides a great scalping opportunity. Who would like to do some scalping today? Hoo-ha! Well, look at that. Ron says, as a client, you'd like to say what superb customer service he's received from TradersWay. Right on. Good to know. Thank goodness. All right, so yeah, ADP. So what will happen is it'll come out and we'll throw down a trade. What do you want to do, a spot trade or a binary trade? Or maybe both. Yeah, we got the stupid euro thing, however, right? So it could really mess things up. And what time is, so the announcement's at 7:45, right, in 10 minutes. When is the press conference? Okay, when is ADP? Yeah, so we're like 10 minutes away from 30 minutes or 40 minutes away from huge news, and then 45 minutes away or whatever, you know, just after that we got redonkulous news. Sounds like a good opportunity to lose money, so I'm going to use a binary. Because it's just clear as mud. And as much as I like to make money, even more than that, I love to not lose money. So let's get this party started, huh? It's going to be fun. Just that easy. Let me remind you that trading and investing is risky and not appropriate for everyone. However, your past performance, good or bad, is not indicative of your future results. So always stay small, stay humble. Focus on the long term, which means don't try to get rich today, because making a lot of money is a function of taking a lot of risk. And if you take a lot of risk, eventually you'll blow out your trade account. And then, of course, if that's possible, never risk money you cannot afford to lose. Okay. So there we are. Yeah, so we have the ECB stuff. Then we have ADP, and then we got more ECB stuff. Wow. Yeah, crazy day. We're starting to get inflation data out of Europe overnight. Generally not that good, generally not that bad. The UK missed on their number, and so that's why you see the British pound down. Of course, everyone's got one eye on Greece, so that muddies the water as well. Eurozone retail sales, 0.7, little better than expected. Okay. The UK number, 56.5. Okay. That's all good. 29th month in a row of expansion. Right on, UK, you rock. The only thing is that's the worst since December of last year. It's the worst in 6 months. All right, well, that's not fantastic. And things don't tend to get better during the summer, right? So we're already starting off the summer season poorly. And the Eurozone, okay, the numbers are not that good, not that bad. But everyone's focused on Greece. So if the numbers aren't ripper awesome, what that means to many is that the ECB doesn't have a need to stop quantitative easing, right? You see what I mean? So if the inflationary numbers and PMI numbers and all these different things, if the economic indicators are ripper awesome, the ECB may throttle back on their bond purchases. Okay? And that would be less weakening of the euro, which would then be very positive for the euro. Very similar to the taper, where I instantly went from dollar bear to dollar bull. So we get this data, and it's not that good. No reason for the ECB to stop quantitative easing. Euro gets weak. So let me move over to the euro. Hello. Yes. Okay, so this is our old chart going back a long time. You can see all the different opportunities, short, short, short. There's a prediction here, and then it gets a nice pullback, and then a drop, and then what was this again? Anyways, the big move. So we're way up here. WWWD. You know, I don't have it on this chart. I have it on a different chart. Let me just double check it. Was it this one? Hang on. There's so many different versions of the same thing. That's not it. Next. Maybe it's over on this other chart. Hang on. Must be on this one. Oh yeah, must be this one. No, that's the yen. Sorry. Euro dollar. Is it this one where I have it marked up? All right. Okay. There we go. So let's back out here. Let's back out as far as I can. That's not enough. Let's do 15-minute chart. All right. Okay. So we backed, and this is a very similar chart to the other one I had. Okay. You can see this resistance area that goes, let me back out even farther to the hourly, or to, let's say, the half hour. Okay, so we have this area here. That's where we started today's session. Okay, you see how that was the old area for drop. It used to be resistance. Okay. Drop back in now. That's where we started the day. Zoom in a little more. And now we have this where you have the first drop, the second pullback, which is a trade right here. So you sell, drop, pull back, sell that, drop, back, sell that, and that's where we're stalled. Trade one. Okay, trade number one. Trade number two. These are places to enter. Trade number three. Okay. And where do you enter? You enter either right at the top or the break pullback. Capiche? Make sense? Look where it all started at the oscillator pre-London, bada bing, bada boom. And the 4 hour looked similar. Let's see if it still looks that way. Yeah, look at it, the 4 hour up in here. Were you thinking long when the oscillator was clearly 89% overbought? And you were at resistance? Seemed like a decent sell to me. All right, here we go. 30 seconds maybe?
Under 10 seconds. I'm still waiting. Unchanged. Looking at ECB leading policy unchanged as expected. No, looking out for the ECB's press conference about 45 minutes time. Focus will be ECB comments and the economic projection. European bourses remaining at best levels, the DAX up about 1.1%, and bond yields too higher by about 2 basis points.
Can you guys hear that? Cool. So no change. It's going to be the press conference that's important. Okay, I'll document this for us. The news was provided to us by TradeTheNews.com. All right, well, so more sideways action. That's fine. The real trade is going to be during the press conference. In fact, it's usually during the Q&A. Okay, and remember, if he comes out praising the world how great he is because of how awesome quantitative easing is, they'll have to the euro will probably get strong with the idea that more won't be needed. But more likely, he's going to come out and say there are still risks and there are some good signs, but there's a ways to go, and there's still some problems here and there. Then we got to deal with Greece and the Grexit and all that kind of stuff, and that should bring it all back down. Meanwhile, we're going to prepare now for ADP, which is in just a half an hour. Now, ADP, like I said, traditionally has been used by many as a guess mark for how well non-farm payrolls is going to be on Friday. So non-farm payrolls, it's actually comprised of two different surveys, right? The non-farm payrolls, otherwise known as the Employment Situation Report, consist of two surveys. One is the establishment survey, where someone goes door to door, household to household, and they basically ask one question. How many people live here? Does everybody have a job? They don't care if you have 9 jobs. They don't care if you have part-time jobs. They don't care if you're underemployed or you have a PhD, but you're mopping floors at Kentucky Fried Chicken. They don't care about that. It's the government. The next one is a survey. It's called the Establishment Survey, and that's where the government goes door to door, but it's business to business, right? And they walk in, and the survey, I think, is a lot better, and they just go out and say, how many people on your payroll? How many people on your payroll? How many people on your payroll? Let's see your payroll. How many people are on your payroll? Okay, that's fine. That's probably a better methodology, because if someone in the household does have 3 part-time jobs, well, they will be counted 3 times through the establishment survey. Okay? They don't know if you have a PhD, but whatever. At least you're counted. But the major problem with all of this is that there's no way in the world that the United States government is rich enough or smart enough to be able to sample every single citizen. Or let's say every single person in the workforce, where it's hundreds and hundreds of millions of people, right? So how do they do it? Right? Financial, or should I say statistical hocus pocus. Statistical engineering. So they sample, I don't know, several thousand people, maybe it's 10,000, maybe it's 20,000, whatever, and then they say, okay, this is what 300 million people are doing nationwide. It's absurd if you think about it. Yeah, hey, well, look, we talked to 20,000 people, so we can now extrapolate that, what everyone in the workforce is going through, what the whole economy is like. So, I mean, it's really absurd, right? Now, the interesting part of this is it's very prone to error, and you do see things like revisions. Now, usually if you're doing math or something like that, a revision would be like a small change, like a rounding error or something like that, right? Maybe you adjusted 0.5%. Well, you know what? For government work, non-farm payrolls is bad, even for such low standards as government work. You will see on a regular basis, where they have 4 more weeks to kind of do some more sampling, you will very often see revisions up to 30 or 40%, sometimes worse than that. They're like, yeah, we thought it was 300,000, no, it was 180. What other job can you think of where you're allowed to be that wrong so frequently? Can you guys think of one? Where you're like, yeah, sorry, boss. I was thinking 300,000, but now it's like 180. What are you going to do? Hey, man, this is hard. Just back off. Doing my best here, working 3 hours a day. Right? Yeah, so a little bit of a problem. But anyways, this is where things can be mispriced, and this is what creates our opportunities to make profit. Now, efficient market hypothesis suggests that all information is priced in immediately, logically, and intelligently, and therefore you can't possibly make any money by outsmarting the market, because the market is too diverse. And if there are discrepancies in the data or inefficiencies in the data, that someone's going to arbitrage that, and then it does get efficient. And that short-term traders will offset each other. Just as many people will long after the NFP number as the short, so it all offsets. And There's no way you can beat the market except if you add leverage, which is just a form of risk. Well, guess what? I don't agree with that entirely. I do agree that all information is priced in immediately, but I do not think the market is right. I don't think the market is intelligent. I don't think the market is logical. I don't think the market does what's in its best interest. By and large, I think the market is stupid and emotional. And from what I can tell, even if you're a hedge fund manager with $30 billion under management, you're still stupid most of the time. So that creates opportunities for us. Now, with rounding errors from government information, up to 30 or 40%, well, then what'll happen is even the smart money will find that they adjusted their portfolio based on last month's number, last month. And now the government comes in and says, whoa, well, we were a little bit wrong there. Sorry, dude. But now you got to readjust again. And this is what creates volatility during non-farm payrolls. Non-farm payrolls is important to things like interest rates, credit, interest rates on credit, like credit cards, and mortgages, right? But every financial manager, every bank manager, every CFO of corporations, mutual equity managers, and I'm not talking just in the United States, but globally, are impacted by this instantaneously and will, to some degree, need to either adjust their outlook for the growth of the U.S. economy and all these other markets, or they need to rebalance their portfolio or change their hedging strategies, so on and so forth. Now, the jobs report in Canada is also important, and the jobs report in Timbuktu is also important. But why is non-farm payrolls trump those job reports? Aussie job report, I like to trade it, but it's nothing like NFP. Why? What's so big about, who cares about the United States of America? Greatest country in the world, holding it. Who cares? Yeah, because it's a reserve currency, Wyatt. You like gold, you like oil? Guess what? It's priced in dollars. Probably, I don't know, I'd guess, what, 20% of the economies around the world have currencies that are pegged to the US dollar? So on and so forth. Okay? Plus, it's the largest economy in the world on top of that. So there's a lot of trading opportunities, there's lots of investing opportunities, and business opportunities, and so on and so forth, right? You want to make a lot of money in this world? It's pretty hard to do it without the United States of America. So everyone, even if you're a fund manager in Malaysia, you care about non-farm payrolls a lot. So therefore, if the headline number comes out and it's quite different from what you thought, lots and lots and lots and lots of market participants globally will need to, like I said, either adjust their outlook, which means, you know, what opportunities they're looking to profit from, or rebalance their portfolio and adjust for risk, like hedging. They might have to change their hedging strategies and stuff because some new information came about. Now, what does Coca-Cola do to hedge its exposure to the US dollar? Because remember, the US dollar is going up and up and up, and to an American company that sells products globally, that's not a good thing because now Coca-Cola in every country in the world is more expensive. So they're going to need to have a foreign exchange strategy, aka hedge. Well, what if things change with this NFP number? Then they're going to have to change that hedging strategy. And what about the price of sugar and the price of water and the, you know, blah, 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 blah. So this is a really, really, really big deal. So to accurately prepare yourself to trade these things, you need to have a model so that you can have have various strategies ready to go depending on what headline number comes out. This is where you look at other things. ISM, subcomponent the employment subcomponent of ISM services, for example, and a whole bunch of other things. You take all that data, like let's say the trend in weekly jobless claims, the trend in non-farm payrolls, the trend in ADP, and whatever, and you put all these things together, and you get good, better, best, and various numbers come out, and then you get ready to prepare. That's just models, pretty normal economic and statistical models. And ADP generally is part of that. Now, in a normal market, in the past, Kurt Worley, who used to be my quantitative analyst, I had him go back and look over, I think it was like 7 years of ADP, and compare those results to non-farm payrolls results, the actual results, and there was no correlation whatsoever. It didn't matter. ADP was worthless. But more currently, because the economic figures are purely manipulated by the Fed, and I don't mean like made up or wrong numbers. No, the economy is moving specifically based on Fed policy. The government certainly did not save you. If you live in the United States, newsflash, it wasn't Congress. Newsflash, it wasn't the Senate. Newsflash, it wasn't Obama, President of the United States of America. It wasn't any of those guys. If they did anything, they made it worse, except cash for clunkers. So they bailed out the car industry and then gave the car industry more free money through cash for clunkers. Besides that, they screwed everything up. So who saved America? Well, that's the Fed. Lots of people hate the Fed, whatever. Okay? That's the only thing that worked. So therefore, those policies put in place have affected ADP just as much as it affected NFP because it's pushing the numbers up. That's what it's designed to do. So the correlation right now is actually quite high. If ADP does really well, NFP will probably do pretty well. So therefore, a lot of traders are using ADP as a means to trade just like NFP. Okay? And so, long story short, ADP has become a great trading opportunity. So in 15 minutes from now, we'll probably have a scalp. Okay? And a very, very good number is likely to bring dollar strength. And that's that. And it'll also be likely to indicate that non-farm payrolls on Friday will be a good number. What info did you get when you subscribed with Consensus? What? I'm not sure if I understand. Who makes the consensus numbers? What Wyatt asks? Well, usually it's a survey of economists and strategists from various sources, and they jumble it all up. I wrote an article for FX Street. It's going to be published on how to come up with your own number, and I go through all the different sources, give you links to them all, and give you a strategy for how to come up with your own number, basically. All right. But really, what matters most, I think, is the market's reaction, because you're not likely to move the market, and you're probably not front running 3 or 4 days in advance based on the financial models that you've created that predicts the outcome of NFP, and you're going to be so much smarter than everybody else that you're going to be in first and laughing when it finally comes out. You're probably just trading. So therefore, honestly, does it matter that much? It's probably going to be about as expected. Now, if it comes out as expected, then my strategy is to use the revision number. So you got to pay attention to that as well. But what we're talking about today is ADP is tradable. Okay? So you got a couple of things that you can do here. All right, you tell me, what is the average daily range for Euro USD? What's your guess? Some of you might actually have the number. Oscar says 80 to 120 pips. Can I just say 100 pips? Is everybody okay with that? Okay. All right. Okay. So let's do this. Beep, 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 beep. What's the value of the Euro USD? Basically 111. So just above 110 would be about here. Actually, I don't remember why that line's there, but okay. So let's mark this. That can't be right. It's a little lower than that, isn't it? Hang on. Why won't it grab it? Come on now. There we go. Now let's make it the 200 EMA. That seems to be pretty close. Okay, now I take that distance and I put it up here. You know the law. All right, so one strategy is to just let the number go. And if it hits one of those zones, you trade it back into the market because it's moved more than enough. Okay? So you trade it like, let it move up, and then trade back in. And it'll typically take almost an hour to get down there, or certainly half an hour. Okay, hang on, let me get rid of that other line. You see, oh, look at how beautifully we have this marked up. I can't delete that. Look how beautifully we already have it marked up. See, I tell you, man, I still love trading. You see this? This gives me goosebumps. Love it. Okay, so I was going to delete this up thing. You're just going to have to deal with it. All right. Beep, 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 beep. Okay, now the second way to trade it is a volatility play, and that's where wherever the candles go, if the number comes out and we get a bunch of green candles, then we're going to sit back on the 1 minute chart and wait for retracement and sell somewhere between the 382 and 618. So if the first, let's say if the first 3 or 4 candles are green, 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 in this case, green, 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 then we'll just sit back and wait. Hits a midpoint cycle level, then it's going to come down, let's say about 50%, and then we're going to long, and it's going to make continuation pattern. So we'll be long there. Like that. Oops, it's not very pretty, but I think you know what I mean. And then your stop will be just below in here. I know you can't see that because of the fib area, but let's just say right there, just below that, okay? Let's say like this. Stop would be kind of in there. So one's a volatility play where you're in it probably 3 or 4 minutes after the news. And the other one is a range play, like a counter trend play that might happen 30 minutes after the news. What do you stink? Smell like a plan? Igor, it's a scalp. It has no bearing on fundamentals or technical bias. It's a scalp. Okay? He says, I don't get it. You still want to short? I have no idea what I want to do because it hasn't happened yet. It's a scalp. Okay? So it's just easier to do this with my drawing tool. Okay? So let's say the news comes out, we don't get a scalp. Okay? It just happens too quickly. But we find ourselves way up here 30 minutes after non-farm payrolls. This is where you drop into a small time frame and look for the opportunity to trade back into the range. Okay? But if we are watching this on a 1 minute chart, the news comes out and we get a bunch of green candles like this, a few minutes later we're hoping it'll be down here, and if so, we're long it, trade it up into here. So there's two things: trade it up into the sell zone, or wait for it to get to the sell zone and then trade back into the range. If it's bearish, we're going to probably end up doing the same thing, trade it back to the range. Okay? Just mirror opposites. Same thing if it comes out bearish at first, it's going to drop a bit, then it's going to retrace, and then it's going to drop down more. And then it's going to work its way back into the range. Okay, so there's two different opportunities. You can do none of them. You could do one of them. You could do both of them. But you have to decide now, not 6 minutes from now, not 35 minutes from now. Okay? Igor asks, against the trend, and I believe, we're saying this range one. What we're saying is, if the average daily range is this much to the upside or this much to the downside, that it may not move any farther than that. Okay? Okay? That these areas here is the, let's say the top, the most logical extreme above or below current price, which is right in the middle. And that what you're betting on, because that's all it is, it's a scalp, is that it's not likely to move much farther than that. So therefore, and I didn't say just throw down a trade, I said when you're down in here, maybe on a 1 minute chart, you look for reversal patterns that suggest it's going to, that it's the falling has stopped. Now you could be wrong and it just move sideways for a while, but certainly not down. Well, maybe that's why binary is a better trade here. Same thing. If we're way up here, and then we reversal pattern, well, trade the reversal pattern is all I'm suggesting. And yeah, it is a counter trend move, but then again, the scalp moved the market a whole average daily range in about 20 minutes. If it shows signs of weakness, someone's going to take that opportunity, and maybe you'll be there, right? No, this is ADP. We'll come back for, well, how about this? Let me say this. The ECB press conference is not easy to scalp because it's not necessarily event-driven. What time is he going to say something to that will move the market? What time? We don't know. We know, like, it starts at 8:30, but then he's got to read a statement, and then, you know, some stripper is going to come in and throw confetti on him. There's going to be a big break, and then he's going to come. Wait, that happened last. Yeah, you thought I was joking. That happened last time. So that delays things. I mean, we don't know what he's going to say, if he's going to say anything, and if he does say something, what he's going to say and when he's going to say it. And then even all that, we don't know the market's reaction to it. It's tradable, but it's not necessarily like this type of event-driven strategy. So it's more like pick and choose. That's a different strategy. So let's just do ADP for now. Okay? And like I said, this is a great opportunity to lose money because we're trading ADP, and then shortly after that, we're going to get the ECB preference. But hopefully it's enough time to get at least one of these trades going. All right, so maybe the event-driven scalp is the first one, and we make 25 or 30 or 40 pips, take profit, and then get ready for the ECB press. Maybe that is how it works out today, hopefully. We're expecting 200,000 on the ADP number today. Last month we only got a 169. So I don't know why they want a better number, but we'll see. So if it comes out 225 or 230, that'd be fantastic, and the dollar would get ripper strong. I don't think so, though, but whatever. Let me zoom in. Remember, you don't have to trade, or you can do a demo. Just less than 1 minute.
15 seconds, 15 seconds, looking for plus 200,000 in ADP. $201,000, roughly in line with the 200,000 expected. Small business plus 122,000, medium business plus 65,000, construction plus 27,000.
Prior revised slightly lower to 165 from 169. Prior ADP revised slightly lower.
So we saw nice growth in the construction industry, but again, a decline in manufacturing. Manufacturing is fell by 5,000. In the commentary, saying the labor market moved back above 200,000, which has been something of a bellwether for healthy employment growth. And the job market posts solid gains in May, says Mark Zandi. Employment growth remains near the average of the past couple of years. And the current pace of job growth, the economy will be back to full employment by this time next year. The only blemishes are the decline in mining jobs due to the collapse in oil price and the decline in manufacturing due to the strong dollar.
Yeah, Edwin, I'm short at 1147, I think it is.
Employment data coming in line with expectations in the back month revised only slightly lower. And then some of the weakness seen in construction, weakness seen in manufacturing jobs.
I hope you can hear all this. Okay. Remember, if you don't get a retracement, you don't trade it. So if you're thinking about scalping it down, you need to make a decision. This isn't the greatest setup that I've seen. In fact, it's kind of poor because it was green, then it was red, and it kind of made a low, but not low. I mean, pretty muted. But the only, if you're going to trade the way that we discussed before the news, it's touching the 3A2. Just above it's the 618. So this little pink area, that's the sell zone. So you need to make a decision now. If you're going to scalp it, you'll be short in the next 3 minutes. Probably 3 minutes. And within 3 or 4 minutes after that, you will either be profitable or you'll be out for a small loss. Or you trade the binary and you'll just pray. Either way, you'll lose the same amount of money, so you don't care if it goes up 200 pips or 2 pips. Okay? Okay, so now you got permission to pull the trigger. Remember, it's just a scalp. Well, in this case, Lucas, it's a scalp. So, like I said before the news, your stop will just be above this area. But let's say you pulled the trigger right at the 50%. If you're not profitable, let's say 4 minutes from now, you can consider getting out even if you're only down 8 pips. Why waste the other pips? Okay? It's a scalp. You shouldn't be sitting on it losing money. Okay? So this is the first candle. Still hasn't done much. Did anyone pull it? On the new scalp? Is anyone short in that red zone? Somebody shorted in the red zone? All right, well then, this is where now you just wait. Okay, there's the 618. Remember, it's, and I guess I should reverse. Well, there's so many things going on here. I'll back out to the fiver. Remember, it's just a scalp. I'm saying it, but I want to make sure that you understand. If you took it, the only thing that you're, you can't see that. Let's try a different color here. If you took it, the only thing that you're trading is it made a drop. It's retraced. Wait, it didn't make a drop that big. Hang on. Let's do it differently. Okay, I want you to put this in context. It's not like a long-term focus. It's not a fundamental, anything. Just what's happened. It dropped. It made a pullback. And since you're trading the market's response to the news, you sold. Okay? And that's it. And that's what you're expecting. Anything less than that, you'd get out. You just say, well, that didn't work. And that's it. Okay? And if you can't afford that, you're over leveraged. Or you shouldn't be trading it. Okay? So let's zoom in. How does it look now? Okay? Can you guys see my pre-trade news? This is one of my pre-London trades. Can you see that here? It's still in. So it's getting, okay? But that's a cash trade. I suggested maybe a binary is a better one on this. So watch this. Beep. Change the start to a Euro USD binary. And you will see I am short here. You can't see that. Hang on. I am short here. Okay, right off the, just below the 50% retracement. Too much going on. Maybe I should, let's see if we have an almost naked chart here for binaries. There we go. Okay. And again, this isn't like a statement. It's a scalp. The market dropped on the ADP headline number. It retraced. I shorted about at the 50% mark. And it's either going down and I make money, or it doesn't go down and I'm out. Done. Easy peasy lemon squeezy. Comments, thoughts, concerns, questions? I hope this is the type of training that that you're looking for. Yeah, that one's a binary. But I suggested earlier, because of the ECB nonsense, that you should use a binary. So that's it. Thank you, Gregors. How do you decide your profit area? It all depends. Trade it down to support or jam a stop. In this case, it doesn't matter. It's binary, so it's another reason to use a binary. Okay, doesn't matter. If I make 2 pips or 200 pips, it doesn't matter. I'm going to get paid the same. If I lose 2 pips or 200 pips, it doesn't matter. I lose the same. It doesn't matter. I don't have to manage this at all. Okay. It's binary, so I'm either right or I'm wrong. There's nothing else to it. In this case, it's just a scalp. I just did what the market told me. I didn't make any decision. I didn't sit and analyze for hours and days. There wasn't a debate. There wasn't a group hug. The market dropped on the ADP news, and I sold just below the 50%. Right? That's all. Right? I know it's a little sloppy. I'm trading in front of 64 people while I'm explaining the details of ADP and its importance to NFP and NFP's importance to the overall economy and blah, 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 blah. Okay. All right, so Henry takes 4 pips. Henry, I'd rather you take a loss than make 4 pips. Jammed your stop. No, seriously. There's a lot of people that try to make careers on just making 4 or 5 or 6 pips at a time. You will fail eventually. It's just not how to trade properly. Lots of people love doing it. You'll pay lots of commissions and lots of spread fees. You know, TradersWay would probably love it. They'll make a lot of money. But what they want is actually for you to succeed so that you could trade for many, many, many years to come. I think if you just focus on making 4 pips here, 4 pips there, eventually you will lose and nobody wins. Okay, so in this case, I'd rather you get a trade in and let the pattern either fulfill itself or fail. But 4 pips, you know, it's just not, your time is more valuable, I bet, Henry. Okay? And 4 pips isn't worth the risk. It's like playing Russian roulette, I guess, is what you're saying. What I'm saying. Just either make, make a trade or don't make a trade. Well, here's another way of looking at it. Anything less than 50 pips profit, I almost consider just a break-even trade. Like I'm like, meh. Oh, well, it didn't work out that well. I'd be upset with 9. I'm like, why didn't this work out? But if I take a 9 pip profit, it's probably because I was up 40 pips. Okay, I certainly wasn't 9. Yeah, you're right. Oscar's like, yeah, but it's a scalp. But seriously, I'm not trying to make 9 pips. It's not worth my time. How am I going to make it even interesting? What, put 900 standard lots on it so I can make, $90,000, right? No. So in this case, it's just a volatility. And we knew it was kind of mediocre. It just felt mediocre to begin with, right? It was very slow, but whatever. So take the shot, let it fulfill itself. I'd rather you say, I don't want you to take a 50 pip loss. So, let's say your first stop's up here. I don't know how many pips that is. It's not many, but I'd say the bare minimum you should make on a scalp would be bare minimum. Bare minimum. I don't even like saying it, but yeah, seriously, I don't know if I can say it. I'm not going to say it. Then the next one is the bare minimum you should really make is 50 pips. I was going to say 25, but it just doesn't feel right. It's pathetic. I mean, you could just get lucky. You could make a stupid trade and make 25 pips. So if you get this right, you took risk. I mean, think of it, right? If you're right, you should get paid. Agreed? I mean, you took the risk, you did the analysis, you set up the trade, you had the patience and discipline. Boom, look, I made money, by the way. Easy peasy lemon squeezy. So anyways, you set it up, you waited for the opportunity, you waited for the news to come out, you set it all up, you waited for the retracement, you sold at the right zone, and now you want to make $9? I mean, are you kidding me? So at least get paid, right? So I'd say, let's say you had a 50 pip stop on a scalp. 50 pips on a scalp, all right, that's all right. It's not good, it's not bad. I mean, it's fine. You showed up, you made some money, you did your job, don't worry about it, right? So now that it's moved, I guess you could move your stop to break even now. If it flips, then it flips. Notice I already got my profit. You notice that? I'm already out. I'm out spending it, right? Look at this. I'm already out. Made my money. I don't care about that. I don't care about that. Don't you worry about that, boy. And this is why we get up right before. We knew this would be ugly with the stupid ECB stuff, right? Now, what was the second opportunity to be patient for, guys? Is it on this chart? It's not on this one. What was the other one? Guess it's this one. Trade it back into the range. What? And where was that set up? I got to really head back now if I'm going to mark that up. Where was it? Oh, way down there. It's way down there, right? So we got tons of time to wait. You can go, let's go back to this old chart. You could do the 5-minute version instead of the 1-minute version. Anybody want to do that? We had it here, right? Do the exact same thing now, but instead of setting it up on a 1-minute chart, do it on a 5-minute chart. So we would have just had that retracement again, right? I guess I should have left, because now we've had this on the last 5-minute candle. It did come back in 3A2, right? It's basically doing it now. Now, if you made profit on the 1-minute scalp, now that you're trading the 5-minute scalp, you can basically just trade the profit you just made, and now you're trading with the bank's money. Yeah, Buzz, but we already knew all that. Right, of course. It's amazing how dumb the market is, like I said before. Who thought the ECB would stop quantitative easing already? They just, it's like, who thinks the Fed's going to raise interest rates? Well, apparently everybody but me, according to CNN, that is. But that would be ridiculous. That noise creates trading opportunities for us, because that would be dumb for the ECB to stop now. But you know what? I've been surprised by, you know, about stupidity. How about the Bank of Japan raising interest rates too soon, which they did, I don't know, 20 years ago. Then they were in the same situation again. The economy started improving. They raised interest rates too soon again. Killed their economy. How about this time? They're bailing out their economy. They do unprecedented levels of quantitative easing. Spurs the economy. Then they jack up taxes. Kills the economy again. I mean, 3 generations of stupidity at the Bank of Japan. It's like they sit around dreaming up different ways. So it can happen. I can be wrong. I don't see any reason why the ECB would stop quantitative easing, and they already told us it would go well into 2016. I can't remember the exact words and stuff, but I'm pretty sure you said it was going to go for 18 months. All right, fine, good, great. Why would the Fed raise interest rates? I can't even conjure up one reason. So, all right, looks like that's all out. I'm glad I made my money, huh? Take the money and run. Cool. September 2016. Yeah. So anyways, that's a scalp. That's that. Draghi is talking. He says the quantitative easing asset purchase program is proceeding well. They're not even paying attention to the CPI fluctuations. Not even paying attention. Yeah, they are completely, in his words, the committee. All right, the committee is looking past CPI fluctuations. Okay, what just came out were the staff projections. And wow, I'm surprised by this. Okay, why the market jumped, I'm not sure, but the ECB projections, I mean, I believe it jumped on these projections, but all they did was reaffirm what they've already said. So 2015 GDP, still 1.5%, no change. 2016 GDP, 1.9%, no change. For some reason, the market says that's good news. I think this is just choppiness. So I think my trading for today on that one is going to be one and done as far as the scalps. Top to bottom, only 36 pips total anyways. From the very top, but that was even pre-news, I think. 36 pips, that's it, huh? Oops. It's pretty pathetic. Come on, I'm trying to move this. Would you move? Thank you. Is that right? Is that only 35 pips or something? All right. That is lame. But okay, so where did I trade? It was about here, right? I think my trade expired about there. Because I traded a binary, I 25 bucks. But it could have been 250 if you wanted it, or 25,000, whatever. I shorted here, and I think price had gone like this, and then I expired about here, right? It went a little lower, and then completely reversed 100%. The interesting thing is, even though this is 10 or 12 pips, $15 pips, let's say, I got paid for all 25. That's nice, right? That's the nice thing about binaries. I only had to be below this line. Okay? Okay, I only had to be below this line. There was no stop to manage. There was no target. If price closed 1 pip below that blue line, I'd get paid 25 pips. If the option was up, if price was up here, the option would have expired worthless, and it cost me 25 bucks. Get it? Okay. Nice, right? With no stop management necessary, no limit management. So let's say I used the cash market to scalp. What are the chances I would have got out exactly at the bottom? Right? Almost none. What are the chances I would have got out here? You know, I don't know. I don't know where I would have gotten out. Probably at break even at that point. Once it had dropped, I probably would have jammed the stop, right? Actually, I did jam the stop, didn't I? So I probably would have made nothing. We had the fake stop, remember, and I moved it to break even. So I would have made nothing or close to nothing. But in the binary, there's no stop to manage. So I just needed it to be 1 pip below, which it definitely was. So I made 25 pips. Cool, huh? Look at this. I'm looking at this and I'm thinking bulls and bears lost money. How scary, huh? Yeah, well, just be careful, yo. So let me wrap it up speaking fundamentally. Draghi hasn't made a change at all. He's already told us it would go into 2016, well into 2016. He's told us flat out, he doesn't care what the CPI numbers are. He doesn't care if it goes to 200% inflation on the short term. Obviously, that's not going to happen, right? But he actually says, QE is proceeding well, and the committee is looking past CPI fluctuations. That's it. So nothing that happens in the next few months matters to the ECB. They will continue with quantitative easing till the end of the year, no matter what. Then the ECB staff projections come out, reaffirm this year's GDP outlook and next year's GDP outlook. This is exactly why the ECB has said that they're, no matter what happens, they're not making a change because their PhDs have told them that their projections that they did before are still accurate. So they've given us multiple ways now. Hello? They've given us multiple ways of saying what's in place now. The central banking policy of the European Central Bank is set in stone. And you're going to hear all kinds of things from people and other sources, magazines and websites and TV programs, and they're all going to make it complicated. And many of them are going to misreport it. Draghi has you straight-faced. He looked you in the eye and he told you exactly what he is going to do, and they backed it up with their staff projections. If you hear anything other than that, they're wrong. And guess what? I hear things misreported all the time, guys. So add that to your fundamental bias. And peace on earth be with you. May your profits be above average. I'm going to upload this video to YouTube. It's youtube.com/c/TradersWay. If you watch the video, please leave a comment. Let us know what you learned. Document what you learned for yourself and for others. Okay? If you can't do that, shame on you. So I'll see you guys tomorrow. Thanks for being a client of Traders. Love you, babe. Got to jump.